Hey everyone! Today we are diving into how to craft your own trading system to potentially back more than $8,000. Sounds too good to be true? Stick around till the end of this video to get all the juicy details. Trust me, it's gonna be a fun ride. Let's roll! Alright buddies, let's get down to business. We are kicking things off with a trade on the downside. Eyes on the chart, let's break down these signals. Now our indicators are playing a wee bit hard to get here, but guys, let's zoom right in on this resistance level. Basically, our chart's having a bit of a meh moment, moving sideways. It's like it's playing will it, won't it with that resistance level. Williams is acting as sold out, and MACD, well, it's kinda hinting at growth. But between you and me, with such low volatility right now, I'm thinking the resistance level is going to play hard to get. I'm betting on a little resistance tango followed by a potential breakthrough. Let's see how this dance plays out. By the way, peeps, how do you all interpret the term trading system? Drop your 2 cents in the comments below. I often see some wild interpretations out there. While y'all type away, let me wrap this trade up. And voila! We are up $14. A humble start, but hey, Rome wasn't built in a day. Let's up our game and keep this money train moving. Again, just a heads up, over on my TG channel I host these wicked weekly challenges where we start with $150 and try to turn it into $10,000 in just 5 days. Hop on if you're game, check the video description for the link. And the real fun? It's all happening in our VIP secret society. You also find my deeds there. Slide into my DMS and I'll spill the beans on joining up. Check out what our previous champs have to say and let's get back to it. Guys, more often than not, I see Fox thinking a trading system is just copying some indicator setting and boom, you're the wolf of Wall Street. Let's switch things up. I'm feeling an upward trade this time. Eyes on the chart, folks, I walk you through the signals. It's been a pretty long slide down. Our chart's been playing limbo, touching the Bollinger Band's lower edge. But then, halt. Signs of a U-turn and our green MACD bar is like a big neon arrow pointing it out. So I'm feeling at least a correction, if not a full-blown reversal. So here is the deal. Indicator settings alone don't make a system. That's just the tip of the iceberg. To truly craft your system, you need to dive deep, and that, my friends, is our topic du jour. A trading system is, in essence, your rulebook for when to make a trade. And believe it or not, you can do this without any indicators at all. There are so many flavors of trading out there, but we'll get to that in a bit. For now, let's cash in. We are at $26, folks. Not too shabby. Onwards to the next trade. Alrighty pals, trading system can lean heavily on indicators, or they might be all about fundamental or news analysis. But usually it's mix and match deal. And now it's time to go for a downward option, my friends. Eyes on the price, and by price I mean this chart and my system's signals. Notice the Bollinger Band's narrowing? That's usually a hint that a big level is about to be breached. Mr. Williams is heading to the oversold zone. And hey, check out this cool triangle pattern. A bit of chart trivia, this pattern usually breaks downwards. We are already sleeping below its line, so my spidey senses are tingling for a potential dive. So how do you craft this magical system? Here is a quick and dirty guide. First up, lay down your system's rules. I'm talking about when to jump into the action and when to bail. For binary options, positions tend to close themselves after a set period. But the trick is deciding on the time frame before you even hit the go button. Alright, let's keep the ball rolling. Let's keep an eye on this pair and move on. The second crucial step in crafting a system: testing. And third, analyzing those test results, gauging the effectiveness and tweaking the rules if needed. And now back to the trade. I'm going for an upward option. Let's take a look at the chart. It was rising, hit the Bollinger's upper line, then took a sharp dive. Still I'm trading in line with the trend, which is upwards. Williams briefly stepped out of the overbought zone and is now making a U-turn. After that big red candle, I'm anticipating a pullback and a subsequent rise. We might see further price elevation or even a reversal, but I'm bullish for the next minute. Alright, let's dive into setting down your trading system's rules. First off, it needs to pinpoint the perfect market entry moment. Here you need clarity. Define precisely what you'll regard as green light to open a position and what would be a red light. The trade has settled, folks. Let's up the ante and keep a close watch on the chart's movements. Let's say your market entry signal relies on an indicator. Take Williams, for instance, like I'm doing now. Note down is primary signals, exciting the overbought and oversold zones, entering them, breaking its own levels, and any divergences. By the way, I've just gone for an upward trade. The chart did climb past the previous level and all indicators are hinting at a rise. So I'm betting on an upward trajectory. Let's watch and learn. So you've listed down the primary signals. Now break them down. One set for buying, another for selling. I won't delve deep into signal descriptions here. You can always revisit my channel for in-depth indicator reviews and grab the info you need. For a more structured approach, describe what you'd consider as entry and exit points in critical areas. For instance, Williams considers anything about the -20 mark as the overbought zone. A tip: it's not always visually evident if the indicator has entered a zone. Hover over the indicator line and you'll get its exact value. Let's take a break, friends. The trade has settled, we'll look for the next opportunity. We'll go for an upward trade here and quickly dissect the signals. Our indicators, both MACD and Williams, hint at a bullish trend. The MACD lines distinctly cross from below. Based on the chart, it might ascend to the upper boundary of the Bollinger Bands, right about here. But it might surge beyond that as well. So there is room for growth. Let's watch and continue our discussion. So you've gotten the hang of Williams signals. Is that enough? Probably not. I would advise integrating various technical analysis tools. Your approach depends on your preferences and creativity. You can use MACD and Bollinger Bands like I'm doing now, or plot graphical patterns. As you can see, I don't fixate on a particular set of indicators, aiming to showcase different systems across my videos. Our balance stands at $297. A commendable outcome, but let's not stop here. Let's switch to other currency pairs. Let's opt for an upward trade here, friends. Now keenly observe the chart. We're trading in line with the trend, it's slightly bullish. Williams has excited the oversold zone, and the green MACD bar suggests a potential reversal and line crossover. We are essentially bouncing off the low boundary of the Bollinger Bands, so we're anticipating a climb, perhaps towards the upper edge. Friends, you can mix and match various indicators, but there is one cardinal rule everyone, especially beginners, should obey. The signals must be confirmed by the price action. Let's break that down. Price touches or breaches of resistance, support or trend lines can act as confirmations. Such erratic candle movements like what we are observing now won't send your heart racing. Our trade is about to close. We have a result. Let's hunt for the next opportunity. Let's initiate a trade here. Why a downward one? Friends, the signals seem pretty strong to me. Williams indicates an exit from the oversold zone and a potential downward crossover of MACD lines is on the horizon. That is, after such an extended rise, we are rebounding from the upper boundary of the Bollinger Bands channel. By the way, note that the bands are beginning to tighten, suggesting a potential change in direction. Hence, we have room to move. I expect a downward motion. Let's observe. Back to our discussion. A breakout can be identified by a candle's closure beyond the resistance level. A bounce, on the other hand, is characterized by the formation of a reversal pattern right at the support. The key is to be patient and refrain from impulsively clicking when there are signals, even if it only seems that the price is about to break through a level. When you have clear signals and accurate goals, the trade ends in profit, as in this case. But there is a catch. The price and the indicator don't always break levels synchronously. For instance, the price might have already breached its level while Williams does so only on the second or third candle. What should one do? We'll discuss that later. For now, let's hunt for the next trading opportunity. I'll go for an upward trade, friends. Why am I anticipating this move? Essentially, the current motion is almost sideways, though there is a slight uptrend. The chart has approached a counter-trend support level. Will it break through? On the first attempt, and given this volatility, I highly doubt it. So, while our indicators hint at a decline, I'm still expecting a rebound upward. Later, the chart might turn downward, but that's still uncertain. Let's watch. So, what should you do when the chart and indicators are out of sync? There are two answers. The first is to ignore such instances. Simply refrain from trading until a clear signal emerges. Indeed, the fear of missing out might torment you, but with experience you can refine your rules. However, if you're just starting out, own your patience. This trade wasn't easy for me either, so I'll look for an opportunity with a different pair. Trading the currency pair Canadian dollar Swiss franc. Here I expect a decrease in the quote trades, friends. Basically, let's look at the indicators. All of them are signaling a downward trend. Currently, the chart is at support level that aligns with the Bollinger Band's middle line. The Bollinger Bands themselves are narrowing, hinting at a potential reversal, so I anticipate a downward move in the future. Let's keep an eye on the price. Back to our chat. We mentioned that with experience, one can expand and complicate the rules. For example, the signals from the indicator and the price don't always have to be in sync. One can maintain a signal from one source, for example, for up to 3 candles. Summing up, our system now says signals from Williams should correlate with other indicators and be confirmed by price, either by breaching or bouncing from a level. Meanwhile, a signal from an indicator is valid for no more than the next 3 candles. The trade ended in profit, so I decided to stick with pairs for now. Now you've got something that resembles a set of rules. What next? You need systematization for further analysis. And you must jot down all signal combinations. But we'll delve deeper into that later. Initiating a downward trade based on the same signals. There was a price correction candle, it rose a bit. But there is no reason for a major change. Therefore, I'm trading on the bounce and expecting further decline. Let's continue our discussion. So I'd recommend not being lazy and noting down all possible combinations for different market situations. Separate signals for a decrease and ones for trading during an increase. For when levels are breached and for reversals. Once again, every single combination. The number might be quite vast. With 3 indicators, the count might exceed 100. Why so many? This is essential for analysis, especially for beginners. There is no room for guessing or gut feelings in trading. You need to know precisely under which market situation your system performs best. Friends, the trade is concluded. Let's hunt for a new opportunity. Currency pair Euro-Canadian dollar. Let's switch to it and trade a put option expecting the quote rates to decrease. Williams is rapidly moving towards the oversold zone. I am majorly relying on it. And if we draw a line through the last 3 peaks, we can see a market reversal trend. Therefore, we're anticipating a price drop and moving forward. Firstly, when you note down all the signals and evaluate the number of combinations, you might conclude that not all are necessary and it's better to reduce some. Reduce the number of indicators, for instance. I often seen beginners trade with 5-6 indicators and they themselves can't keep track of all the signals they receive. Friends, the trade is nearing closure. Already have $4,248 in balance. But that's not the limit. Let's see what figure we can achieve today. Here I'll open a call option expecting the quote rates to rise. Looking at the chart, I see the price has reached a significant support level that prominently runs throughout the trading session. The chart hasn't dropped below this level for a long time, and as it hits the level, Williams rises from the oversold zone, and the MACD displays green histogram columns. So we are waiting for a rise and moving forward. After evaluating the number of combinations, you might conclude that you need to simplify the system by reducing the number of indicators. Or you can filter out the sell signals and only trade the rises. Sometimes traders avoid trading sideways and only trade when levels are breached. The choice is yours, but crucially, such segmentation is required for highly precise tests. Another profitable trade closed. The system is functioning perfectly. Let's keep moving. I see a good moment for a put option. Currently, I'm primarily focusing on a strong signal of MACD lines convergence. After the chart touched the upper boundary of the Bollinger Bands, the price continues to decline, and I think this trend will persist. Now let's move to testing our trading system. How to do it? It's pretty straightforward. You can trade based on your signals using a demo account and record the test results in a spreadsheet. But if you're doing this for the first time, I recommend a different approach, because the candlestick fluctuations might confuse and distract you. So you take the chart on the required time frame, scroll it to the left and start advancing it candle by candle to the right. Keep scrolling and look for signals, cross-referencing with your chart. Trade closed. Balance is $5,858, and I think I'll continue with this pair. Essentially, you're mentally opening trades on the historical chart data and calculating their effectiveness. The key question is how many tests to conduct. The more, the better. I aim to make at least 100 trades for each combination to calculate the success percentage. Alright friends, let's get back to trading. I'll open another put option based on the same signals. We've had a similar situation where I opened a trade after a correction, waiting for the decline to continue. By testing the system this way, you'll get a comprehensive view of which signals yield the highest success percentage. The conclusion is clear. It's better to discard poor signals. Opt for those with a success rate above 60%, ideally above 70%. That's a vast amount of data, but the task can be complicated further. The next step in building a trading system is determining the quote to open a position. There are options to resolve this too. The simple approach is whatever the price is, that's our entry. Or you can track signal behavior at the daily highs or lows, for instance. Trade is going to complete. $6,668 in the bank. Let's keep moving. The result is already impressive, but it's not the limit. I'm going to place a put trade. Let me explain my decision. Right now, there is an undeniable uptrend. Every indicator is screaming that. But if we look closely, there is a nuance. The chart skyrocketed to a significant resistance level within one candlestick. It's essential to understand that buyers expended a lot of energy to form this candle. Do they have enough momentum to break through all the barriers immediately? I think not. I anticipate an upward trend in the future, but with a corrective phase to gather strength. Getting back to our discussion, some tests employ a reference to a specific benchmark, like the high or low of the candlestick when a signal appeared. Others wait for a pullback before entering the market to catch a lower price. But there is the risk of the price going against the expected direction during the waiting. Trading again on a put option. Let's examine the indicator signals, friends. We are trading with a trend, and it's bearish, though not very pronounced. The rise observed over the last 10 minutes looks more like a correction than a pivotal moment. It's reached its peak, and now on the indicators we see an exit from the overbought zone in Williams and red bars on MACD. The conclusion is simple: a decline is anticipated. Let's derive some takeaways from our chat. Friends, merely copying indicator settings isn't a system. It's more crucial to link these indicators to factors influencing the market. I've only touched on the surface, but it represents a vast amount of work that needs to be done. The trade is nearing its close. Let's wrap up our trading session and summarize. Friends, we've made a profit of $8,190 today, added to the initial $8 with which we started. Want to achieve similar results? Join my TG channel, get a 50% bonus on your first deposit and tons of valuable information. As mentioned earlier, trading system testing can be more in-depth. If you're keen on diving into the details, let me know in the comments and I'll create another episode on this topic. Also subscribe to the channel so you don't miss out on new episodes. Like the video, hit the notification bell. I'll be delighted to see you again. That's it for today. Goodbye, everyone!